Hello everyone and welcome back to another video. In today's video, I want to run you through Amazon's earnings report because Amazon stock is up roughly 11% on the day and hitting fresh all-time highs after their Q3 2025 earnings. So I went through the report and I found all of the good and the bad. And I actually think that there's some things that even bulls are not necessarily discussing right now. So as always, I want to give you as objective of an analysis as possible as someone who is a shareholder of Amazon. And I will also be explaining what my thoughts are on Amazon's valuation today and what I am doing with my position going forward. So with that being said, let's dive into Amazon's earnings report. And just like always, I went through the report, the presentation, and the transcript to find everything that you need to know. So right away, we can see that Amazon's net sales increased by 13% to $180.2 billion for the third quarter. 13% revenue growth for Amazon is actually quite strong. But what was great to see is that AWS segment sales increased by 20% year over year to $33 billion. And this is the main reason why Amazon is up so much on the day. Analysts were not expecting AWS sales to come in at 20% year over year. And as we're going to see later on in this video, AWS revenue is now accelerating once again. And this is at the same time as Azure and Google Cloud are not seeing as much revenue acceleration. But moving on, we can see that AWS segment operating income was $11.4 billion compared with $10.4 billion in the third quarter of 2024. So AWS's operating income only increased by roughly 10% year over year, which means that AWS's operating margin is continuing to decline in the quarter. And I do not think that a lot of people are talking about this, but this is definitely not the most ideal thing to see, but I do think that AWS's operating margin is volatile from quarter to quarter, and over the long term, I think that it will be pretty stable. Next, we can see that operating cash flows increased by 16% in the trailing 12 months to $130.7 billion. This is fantastic to see because operating cash flow is the best metric to use on Amazon, and it is also the metric that I have been saying is the best to follow for all of the hyperscalers right now, while they're investing so much money into CapEx and building out their infrastructure. So I love to see that Amazon's operating cash flows are continuing to grow and hit all-time highs. Further down in the press release, Andy Jassy, who is the CEO of Amazon, said, AWS is growing at a pace that we have not seen since 2022, re-accelerating to 20.2 year-over-year revenue growth. We continue to see strong demand in AI and core infrastructure, and we've been focused on accelerating capacity, adding more than 3.8 gigawatts in the past 12 months. This is a ridiculous amount of data center capacity to bring online within just 1 year. Amazon is also adding the most capacity out of all of the hyperscalers. So they are investing the most and bringing on the most data center capacity, which I think is actually deepening AWS's moat and leadership. Amazon then gave us fourth quarter 2025 guidance, and here they are saying that they're expecting their sales to grow to $206 to $213 billion, or to grow between 10% and 13%. They're also expecting operating income to come in between 21 and 26 billion, compared with 21.2 billion for the fourth quarter of 2024. So it seems like Amazon is expecting another strong quarter next quarter for top line growth, but operating income looks like it may be flat in the fourth quarter or potentially grow between, 15 to 20%. So it seems like operating income might literally not grow or grow all the way up to 20% for the fourth quarter. But top line, I think, is what matters most for Amazon right now and continuing to see strong AWS sales. So now let's move on to Amazon's cash flow statement. And there's some things here that I have not seen anyone discuss yet. So let's just dive into it. And let's start off by taking a look at the operating cash flows, or the net cash provided by operating activities. So for the third quarter, Amazon produced $35.5 billion of operating cash flow versus roughly $26 billion last year. This means that operating cash flows increased by roughly 36.5% year over year for the third quarter. However, we can see here that Amazon had a $10 billion addition to operating cash flows from deferred income taxes, versus an outflow of $1.3 billion last year. This is roughly an $11.4 billion change to operating cash flows just from deferred income taxes. And what this means is that Amazon is deferring their income tax payments so that they can have the cash right now, but at a later date, they are going to have to pay this $10 billion of deferred income taxes. But in the meantime, this is significantly boosting their operating cash flows. And if these numbers were zeroed out, then Amazon's operating cash flows for the third quarter would have been significantly lower. In fact, they would have been down at around $25 billion, which ultimately means that operating cash flows would have not grown that much on a year over year basis. So, to put it as simple as possible, Amazon's operating cash flows this quarter grew significantly due to them deferring their income tax payment to a later date. They may choose to pay their income taxes in the fourth quarter of 2025, and if they do, then that would actually suppress next quarter's operating cash flows. So basically, Amazon's operating cash flows are being boosted in the short term by simply not paying their taxes right now. This ultimately means that Amazon's operating cash flows may not have been as strong as they look for this quarter. But I'm really just going to be waiting until the fourth quarter to see how the full year's operating cash flows end up looking. Now, what's also interesting is Amazon spent $35.1 billion on capex just this quarter, which was pretty much the amount that they generated in operating cash flow. So Amazon is plowing almost all of their operating cash flows into capex, and no other hyperscaler is doing this or is able to do this. And this is partly because the other hyperscalers have dividend and share buyback commitments to their investors and shareholders. Amazon is the only company that does not have a massive share buyback program announced and also is not paying a dividend now. And what's interesting is every single hyperscaler has said that they are capacity constrained or infrastructure constrained right now. And what this means is that Amazon actually has an advantage over all of their competitors. One, because they are generating the most amount of operating cash flow, and two, because they are actually able to plow the most amount of capital into capex to execute and build out their infrastructure. And this is also partly why Amazon is the only Magnificent 7 stock in my portfolio right now, because I think that this is giving them a competitive advantage by being able to deploy the most amount of dollars towards capex and infrastructure build out. And going forward, it seems like they are going to continue investing pretty much all of their available operating cash flow into capital expenditures. But for now, let's move on to the next screenshot, and this is my favorite table that Amazon reports every single quarter. This table shows us all of their different business segments and how rapidly they are all growing. And here we can see that Amazon's third-party seller services increased revenue by 12%, advertising services increased by 24%, subscription services increased by 11%, and AWS increased by 20%. What's also interesting is third-party seller services, advertising services, and AWS all saw accelerated growth to revenue in this quarter. So these three businesses are massive, and they're actually starting to re-accelerate heading into the end of the year. And the fourth quarter tends to be the strongest quarter for Amazon historically. So if these businesses can continue to re-accelerate into the fourth quarter, then I think that this could be setting Amazon up for a massive Q4. And I want to explain why I think this could happen as well. If we head over to Stock Unlock quick, we can see Amazon's advertising services revenue. And in the third quarter, we can see that they produced $17.7 billion in advertising revenue. Now, in the fourth quarter of 2024, which historically has always been their most profitable and biggest advertising revenue quarter, well, in the fourth quarter of 2024, they produced $17.3 billion in advertising revenue. This means that in the third quarter of 2025, Amazon produced more advertising revenue than in the fourth quarter of the previous year. Now, if we take a look at the trend of this chart, this is the first time that the third quarter advertising revenue has been higher than the previous year's fourth quarter. And what this ultimately means is that Amazon could have a massive fourth quarter for advertising revenue. I also found this chart right here on X, which is Amazon's advertising revenue year-over-year growth rates every single quarter. And we can clearly see that Amazon's advertising revenue growth rates are re-accelerating, and even quarter over quarter, the growth rate accelerated once again to 23.5% versus 22.9% in the second quarter of 2025. So if Amazon can keep this up, then once again, the fourth quarter could be a monster quarter for their advertising revenue. This next screenshot that I found on X is Amazon's AWS revenue percent change. And we can see that in this quarter, it was 20.23%, which clearly shows us that AWS's revenue growth rates are re-accelerating. And this was the fastest growth rate that AWS has seen in about 3 years now. And what's even more impressive is AWS is seeing accelerated growth rates, even though the business has grown significantly over the past 3 years. So they're seeing higher growth rates on a much larger revenue base. This next screenshot shows us the revenue growth rates between AWS, Microsoft Azure, and Google Cloud. Now, we can see that AWS has the lowest revenue growth rate down here at 20%. Google Cloud came in at 34%, and Azure came in at 39%. But we can see that Azure's revenue growth rates were flat quarter over quarter. Google Cloud saw a slight acceleration to revenue growth, but AWS saw the most acceleration to revenue growth this quarter, and AWS is the largest cloud provider by far. So I think that this makes the revenue reacceleration look even more impressive, and this is the main reason, in my opinion, why Amazon stock is up so much today. All right, now let's move on to the highlights from their earnings call transcript, and I want to run through these really quick. So here Andy Jassy said, AWS is growing at a pace we haven't seen since 2022, reaccelerating to 20.2% year over year, our largest growth rate in 11 quarters, which we have already discussed and I think is great to see. Then he says, backlog grew to $200 billion by Q3 quarter end, and doesn't include several unannounced new deals in October, which together are more than our total deal volume for all of the third quarter. AWS is gaining momentum. This means that in October, there were more new deals announced for AWS than in all of Q3. So it seems like the momentum for AWS is continuing into the fourth quarter, and we could see another very strong quarter for Q4. Then Andy was asked by an analyst about the 30,000 people that Amazon is planning to lay off, and here was Andy's answer. On your headcount question, what I would tell you is the announcement that we made a few days ago was not really financially driven. And it's not even really AI driven. Not right now, at least. It's culture. If you grow as fast as we did for several years, the size of the business, the number of people, the number of locations, the types of businesses you're in, you end up with a lot more people than you would have had before. And you end up with a lot more layers. When that happens, sometimes without realizing it, you can weaken the ownership of the people that you have who are doing the actual work and who own most of the two-way door decisions. The ones that should be made quickly and right at the front line. It can lead to slowing you down. As a leadership team, we are committed to operating like the world's largest startup. That means removing layers, increasing the amount of ownership that people have, and inventing and moving quickly. I don't know if there's ever been a time in the history of Amazon, or maybe business in general, with the technology transformation happening right now, where it's important to be lean, it's important to be flat, and it's important to move fast. That's what we're going to do. So the massive 30,000 employee layoff that Amazon announced just in the past week is because they want to become a more lean company. This is basically Andy saying that over the past few years, Amazon has overhired because the business has expanded so rapidly. But now the company wants to act like the world's largest startup and be as lean as possible and to move as quickly as possible. And I think that this will be great for both Amazon's profit margins going forward and for the business and how quickly and rapidly it can move and ship new features. So overall, I think that this was a pretty good report for Amazon. I do not think that it was a blowout quarter or the best earnings report that I have ever seen, and that's mostly due to the operating cash flow growth coming mostly from deferred income taxes, and AWS's operating margins continue to be quite suppressed. I personally would like to see AWS's operating income growing with the overall top line, which I do think will happen over the long term. But for this quarter, its operating income was definitely suppressed. And I would also like to see Amazon's operating cash flows growing more organically and not so much from them just deferring income tax payments. I still think that Amazon is a fantastic business where it's compounding and investing as much as they possibly can into growth. And I also think that these investments are paying off with AWS's revenue re-accelerating and with Amazon's advertising business also seeing ridiculously strong growth and continued increased momentum. As I showed earlier, Amazon's advertising business looks like it could have a monster fourth quarter, and it also seems like Andy is giving us hints that AWS is going to have another very strong quarter in the fourth quarter as well. So for me, Amazon is a hold right now, and I am not actively buying more shares. This is because Amazon is trading for all-time highs, and its price to operating cash flow is around 20, which I do think is right around fair value for this business relative to its growth and what I think the growth will be going forward. So no, I am not adding to my Amazon position, but I definitely am not selling. I think that this is going to be a fantastic compounder. Even though it is already a $2.6 trillion company, they have so many different business units that are continuing to scale and grow very well. And over time, I think that Amazon's profit margins will continue to grow and expand because of this. And ultimately, that leads to Amazon's profits being able to grow at a faster rate than the revenue over the long term. This is just a fantastic company. I think it has some of the widest moats in the entire stock market. And yeah, it's just one that I want to keep in my portfolio. But with all that being said, that is going to wrap up my analysis of Amazon's Q3 earnings report. But before I end the video, I want to let you all know that I will be doing a Black Friday sale for my course in the coming weeks. I have been getting a lot of interest and fantastic feedback on my brand new investment course that you can get over at my website, danielpronk.com. But I just want to give you a heads up because if you're considering purchasing my course, then personally, I would wait until that sale so that you can save some money. And if you want to be notified for when the sale is happening, then you can head over to my website, again, danielpronk.com, scroll all the way down to the bottom and enter in your email to my email list, because I will be firing off emails when the Black Friday sale does happen. So again, if you want to get notified as soon as the sale starts, then head over to my website and join my email list at the bottom there. You should be able to find a little box. But with all that being said, as always, thank you so much for tuning in. I truly do appreciate it, and I hope to see you in my next video.